want to hear my craziest subscriber story? This young kid from Germany subscribed to my newsletter. Well, after a year, he unsubscribed. I was like, oh my God, that sucks. And then a year later, he emailed me and he told me that he became a pimp.
Stop.
He said, so he sent me.
Changed my life, Jared.
Yeah, that's what he said. He said I taught him to be an entrepreneur.
Before we get started, a quick reminder that Blockworks' premier institutional conference, the Digital Asset Summit, is returning to New York City this March 24th to 26th. This year represents more than $4.2 trillion in assets under management, with 150 speakers and 750 institutions attending. Speakers include SEC Chair Paul Atkins, CFTC Chair Michael Selig, Fed Governor Stephen Moran, and Tether CEO Paolo Ardonio, alongside countless other executives, asset managers, regulators, and the core crypto infrastructure builders shaping the industry. If you want serious institutional grade view of digital assets in 2026, Digital Asset Summit is where it happens. Use code FORWARD200 for $200 off and head to blockworks.co/events for more details. Nothing said on Forward Guidance is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice, or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research. All right, everybody. Welcome back to another, what do we want to call this? Forward Macro Dirt Mashup edition. Live in Nashville at the TG Macro Conference, first inaugural one, dude.
Man, that was something else, wasn't it?
Such a good time.
Holy
Congrats.
smokes. Thank you very much. I feel, I was telling my wife, like, I'm never proud of myself, but I'm extremely proud of this. You know what I mean? Like, it feels really cool to have that emotion come over you. And it's just because everybody floods you with, oh my God, that was amazing. You know what I mean? And when you look at the roster that we had, man, not shocking.
Yeah,
we got that response.
Yeah, I got to give you some flowers for that a little bit. Like, it's like, I don't know, there's not many really good macro conferences out there. And just the quality, like you had, 6 speakers and just like all would be headliners anywhere.
Yeah.
And yeah, it was awesome.
What'd you think, JD?
Dude, I'm glad you pulled it off. I'm very proud.
Yeah.
I'm very proud of you. I really am.
Oh man,
I've done 6 conferences.
Yeah, no.
But they were all smaller than this.
Yeah. Yeah.
And the logistics around this were a little more complex. And,
Yeah.
And it just went off without a hitch.
Yeah,
So.
this was throwing a wedding. You know what I mean? And it's so much like throwing a wedding because there's so many people. You have your super close to you your whole life people in your family, like my cousin Tony's here, my buddy John Bell, and all that. And then there's like my awesome professional relationships like you guys. And then there's 60, 70 people that I never saw, never met before. And
they all want 5 minutes here.
Yeah, they all want to meet you, and you want to give it to them, right? Because that's why you write to half of them, and you want the other half to subscribe, and you're like,
you and I both run our businesses pretty similar.
We do.
Like, because I try to treat my newsletter as like a family business, like a small business. Like, I reply to every single email.
Yeah.
I try to get to know people personally. I travel around the country to meet people. You do the same thing.
Yeah.
Yeah.
That's what it's about because that's what they appreciate.
Mm-hmm.
And I feel like you win them over for life if you, number one, giving them an iota of good advice in the markets, and number two, giving them time as people. For whatever reason, they look up to you. They look up to you for having some answers that they don't have, right? And it's not really anything else. It's just like your brain aligns with something that helps them, and they don't align with that necessarily. So I guess there's a lot of gratification in being able to help people and hear them say, like, dude, like I've had people that tell me, dude, you made me so much money on that GDX, XN, stuff like that. And then what were we talking about? JD and I were talking about it with a really big wealth manager that was here, a friend of mine named Tom. And he was like, you two guys, since you started writing, how much money collectively would you think that you could have made people? And I was like, I couldn't even come up with that number. And JD was like, tell him,
That's hundreds of millions.
that blew me right.
Yeah. Wow. Yeah. I mean, look, like, things have been really good in the last couple of years. I had a tough. I've gone through tough stretches in the markets where I basically was flatlining for a couple of years. You know, you get a little churn in the subscribers, but the last 2 years have been fantastic.
Yeah.
You feel like what's so cool too is just the nexus of this like anti-traditional media macro community that we have. Like coming here, and this is your conference, your audience, but I had tons of people come at feed and be like, oh man, like love your guys' Forward Guidance show. Like there's this core group of people that are just like, it's cool to do these collaborations. It's cool to see that audience. It's cool to meet these people. Like it's awesome to see it all come together.
The thing that I was most excited about to come was obviously great guest lineup of Jared and Cuppy and Grant speaking, and everybody. For those listening, you got to be here in person because everyone has their shtick, right? Brent's got the dollar milkshake. Cuppy's writing about feudalism. JD, you follow his newsletters and they have their views, but these were all unique presentations. These were all unique ideas, lasting ideas. And also, but even more than that, you can tell people the quality of a person by who they surround themselves with. And that was why I was most excited. People are gravitated towards Tony for what he gives off, like smart, trading insights, teaching people how to think.
And got 3 out of 4.
Yeah, exactly. Yeah. Smart, debatable. But and so I was just excited to see the type of people that were going to be here. Yeah. And when you sat down the first day and the room was just chock full, standing room only. Yeah. And you're talking to the guys. One guy's a logger, one guy's a miner, one guy's a woodworker, and it's like all these people with the same curiosity and motivation.
You want to hear my craziest subscriber story? I had this young kid from Germany subscribe to my newsletter. His name was Stefan, and like 3 months later, I threw a party in New York at a club, and he flew from Germany to the party, and had a great time. Well, after a year, he unsubscribed. I was like, oh my god, that sucks. And then a year later, he emailed me and he told me that he became a pimp.
Stop.
He said, so he sent me.
Changed my life, Jared.
Yeah, that's what he said. He said I taught him to be an entrepreneur. And
it doesn't matter how.
He sent me the website. I mean, it's like eurosky.com or something like that. And he's like, will you please promote it in your newsletter? I'm like, no.
He's like, scratch my back, that's scratch yours. Right?
That takes the cake.
Oh my god. It's like, by the way, I sell a little heroin.
Yeah.
If you want to tell that to your guys, so they know.
That's so classic weaseling into like this. Self-promote your shit.
Dude, So the subscriber experience is really kind of cool. It's this one-on-one thing, and you get paranoid when you have people jump off or whatever, and then you realize that it's never you. It really isn't. Like it's like you get paranoid that people jump off and they'll fill out I have an exit survey. So when somebody leaves the newsletter, I just love to know why. And every time people are like, man, I am like getting killed over here. This changed for me. I don't watch the markets. And you look at it and you're like, okay, I don't want people that are not trading the markets to pay for this. Like this doesn't do you any good. So that's fine.
Yeah.
So then you have guys go and start brothels.
Yeah. Do what you got to do.
You do.
Yeah, I want to talk a little bit about some of this. Obviously, you got to be here to get the real good stuff, but just want to talk a little bit about some of the stuff that we heard. JD, you kicked things off yesterday. You had a chart bonanza. I think
yours the chart bonanza.
The chart bonanza was a lot. Just bang, bang, there. I think that was like over 100 charts. But what was your favorite chart out of there? What was your most interesting takeaway?
My favorite chart, and I've actually used this in a couple of presentations, is the chart that shows the rates of marriage among different age cohorts.
Yeah, that was pop.
Like 1940s, 1950s, people born in the 40s, 50s, 60s, 70s. And once you start getting to the 90s, like it drops off. In 2000s, like people are not getting married. Yeah. And, I don't know what we need to do to promote marriage as an institution. But when people get married, that's when all the economic benefits accrue. Like people make more money, their salaries go up, they buy houses, they have kids, and it is literally falling apart, in the younger generations.
Everybody talks about it and they're just like, oh, wow, that's crazy. But no one just extrapolates the 20 years ahead where it's like you have no population growth.
Yeah.
And it's a global thing. It's happening in Europe, Japan's ancient, and everyone just assumes it fixes itself, which it doesn't with any good thing unless you attack it head on.
Yeah, so I don't really know what the solution is. I mean, the different countries have tried different things. I mentioned Poland, which gave this lifetime tax amnesty if you had 3 kids, then you don't have to pay taxes ever again. It's kind of an interesting concept. One of the interesting things that the social scientists have figured out was it's not just cohabitation, right? Like couples that cohabitate but don't get married don't get the same benefits. It happens when people get married, you know? So, I mean, it's kind of an interesting chart. Why is this at a macro conference? Well, you know, it has all kinds of implications out for the next 20 years about incomes and consumption and debt and all this stuff in the housing market. Like, you know, that's the chart. When I look at it, I'm like, it just blows my mind, you know?
One of the charts I like that you showed was the household sector massively deleveraged. We've talked about that on our show, and how the problems at the sovereign level and how that feeds into a secular inflation regime, because there's actually a lot of ample room for re-leveraging in the household sector when you think about the policies that they're going to have to implement to fix the national debt problem, i.e. grow their way out of it via, you know, nominal inflation and poor real asset return.
Here's an interesting idea. Somebody told me this like 10 years ago as kind of a solution to the national debt. Like, we used to have savings bonds. We used to have the EE savings bonds. Well, Obama got rid of the program. He wanted to cut like 800 jobs in Pittsburgh where they process these things. And then he started the MyRA program, which was like, you invest online and you get like a portfolio of treasury bonds. It's kind of like a mutual fund. And Trump killed that. It got 20 million in assets. It was a complete failure. The interesting thing is that if you had a president who said, you know, going back to the 40s, we had war bonds to finance the war, right? What if Trump or somebody said, look, like this is a patriotic thing to buy savings bonds, and they offered like a decent rate of return? I mean, household net worth is what, like, you know, 50 trillion, 100 trillion. Like, you could potentially finance the debt very easily with a campaign one time.
Maybe tariff refund bonds.
Yeah.
Interesting. That is pretty wild. Yeah. I think another big theme that we're hearing at this conference is half the camp of the speakers that had come here were talking about, you know, you had Doomberg here, which was awesome. And, you know, it was really great to see him walk in his big green bird costume.
All his glory.
I didn't see that.
Oh, we got you. Yeah, look at the unicorn.
You got any money I can borrow?
That would have been sweet.
He's at the weekend.
He was Doom. I've seen him present like probably 8 or 10 times now, and I'm so glad that I asked him to gear it a little bit towards trading and risk management, and then he just took it and knocked it out of the park.
Yeah.
You know what I mean? Like that. But everything from his YOLO story to, you know, exploiting an edge and you know, giving people confidence to sell an oil rally. Like, that was cool. Like, I have confidence to sell an oil rally after what he said. You know, I will be in the weeds waiting for that.
Well, I'll tell you what, today's Friday. Today's the day to sell oil.
Yeah.
You know, because we're not going to attack Iran over the weekend. It's going to open up $4 lower on Monday.
Yeah. I mean, it might have already adjusted to that, you know, as we speak. Who knows? But that was really great.
Yeah. I mean, that's what, like, there's an interesting, I don't know if it's he was who said it, but he was comparing it to, you know, when you're trying to long the VIX, like, it's a decaying asset. And yeah, you can go long for a little bit to catch those reversions. But his perspective was that, you know, secularly, you're fading human ingenuity if you're long commodities. Yeah. And, you know, this conference, like, it had a lot of pretty bullish commodity guys in the space. And he came out here and just said, look, on a long-term horizon, like, you can't own commodities unless you're just hating on human ingenuity. I'm curious how you guys
I 100% agree with that. And I am hating on human ingenuity.
Yeah.
You know, because all of human progress is 3 steps forward and 2 steps back, right? You have 3 steps forward and then 2 steps back. And I am an investor. Tony is not, but I am an investor who makes money on the 2 steps back, right? Like, that is an environment that I'm comfortable trading. I like to short things, pretty good at it, you know. Like, I correct me if I'm wrong, but you'd probably have a tougher time in that environment.
I'm horrible in that environment.
Yeah.
I don't like to do that. I'm not comfortable short. I don't literally. It's a 10x degree of difficulty if you ask me, shorting stocks in a bull market anyway. You know what I mean? You get literally. It's one of the things where as soon as you feel good about the position, that means you should probably be covering some. you watch charts that you're short spike lower and you're like, oh, this thing is about to collapse, and it V's back up to where it was. And I just can't manage that. That's not the way my trading goes well. Like I have more confidence from one side.
But it's good that we do the macro dirt. People get both sides of it.
Yeah,
totally.
We give people both both edges to lean on.
Yeah, that's the best. I mean, it feels like right now is we're in sort of that 2 steps back situation for commodities, because suddenly we're like, oh crap, we've underinvested in commodities for the past decade, and now we have all these scarcity situations of AI buildouts or what have you. And it feels like it's one of those times where there is that 2 step back that you can ride on, but it's also good to keep in mind the long-term horizon that eventually there will be those 3 steps forward eventually.
Well, sorry, was I going to interrupt you?
No, not at all.
So, it's good to have commodities in your portfolio all the time anyway, as a diverse means of diversification, right? Because commodities are low correlated or negatively correlated to stocks or bonds. You need to have some real assets with your financial assets. That's where the whole awesome portfolio comes in.
Yeah.
And it provides a level of diversification that you can't get with a 60-40 portfolio,
I agree completely. New secular. To triangulate, each speaker had their own views. There's a lot of bullish gold undercurrents through everybody, I would say. Particularly as well, Doomberg, who identified gold as a monetary commodity versus
Took it
industrial.
out of the commodity basket, basically. Yeah.
But one of the things I was looking for were commonality themes throughout, people that sort of zeroed in on where I could find confluence in an asset class behind everybody's views. And one of them was, you have Doomberg talking about, gold's different. It's a monetary hedge against, all the craziness ongoing. And there's this downward over time pressure on oil, which is a large input cost to miners, for example. So you think of that backdrop, and then you have JJ, who's absolute commodity guru, spent decades in trading the pits, and his stories were just. I know we want to talk about those.
We'll get to.
And you can find these threads, which is for me around gold miners, because you might get these spikes in oil on geopolitical whatever, but we know a key agenda item is to keep oil and gas prices lower. Meanwhile, nothing behind the gold thesis is changing outside, short-term overbought, craziness. And so you combine the secular tailwind for the miners' revenue and a secular headwind for, getting oil prices down.
That is powerful, right? That is powerful. That's why I think that they could be up 200% in a year, because they're crushing it on the higher metal prices. They haven't even reported those quarters yet that they're crushing. You know what I mean? They probably leave some in the tank of earnings. You know what I mean?
This week they report a lot. Like, they're delevering like never before. They have so much cash, they don't know what to do with it.
Yeah. The gold miners, if gold stayed at 5,000 for the next 10 years, the gold miners are still a triple from here.
Yeah, right.
Even if gold doesn't go up.
Yeah, everyone's so scarred for them still. Like his company's presentation, which it's that's what makes markets interesting and cyclical though, because like you get burned trying to touch the gold miner long for 10 years, and everyone's and that's why we're seeing GDX price vertical, but actually GDX shares decreasing because you're still not having that blow off.
Yeah, I think the GDX shares outstanding. I mean, there's a lot of funny stuff with ETFs. There's structured products on them and stuff like that. Like, I don't think it's really a measure of sentiment in miners. But having said that, like, for years, I just sold puts on GDX. I would sell slightly out of the money puts. They would go down. I would get signed. I would buy the stock. I just sold puts on it for years, and then I bought a bunch of GDX, and finally worked. So
there's one word of caution that I think I would have about the certainty of oil prices going down, and that's if real money comes after it. It's like everybody's like, well, there's so much refined product that's floating around the harbor, and there's plenty of oil and this and that, and so it's like that until one or two or three large funds right after the other decide to commit a couple $100 million to that trade. And then next thing you know, that covers that inventory that was sitting over there. That can essentially be off the market because this guy is putting that money in and taking the position off the market. So that stuff happens fast. And if you get a whole student body right, we got to own oil for whatever reason. Like, were the oil dynamics any different when it spiked to 130 on the Russia-Ukraine invasion? I thought they were very different.
Yeah.
You know what I mean? But it was a blatant epicenter, attack on production areas and potential danger to the strait or whatever. But I feel like investment capital can come and take that oil off the market.
For sure.
So I try not to get too worried about it. And I like oil stocks, they're speaking to me, right?
Yeah, I was gonna say the producer situation like that is just. I mean, this is something also Doomberg talked about. It's just like, yeah, own the producers, the picks and shovels,
Yeah.
the ones where, yeah, you can actually get those consistent free cash flows happening regardless of where the actual commodity goes over the next few years. Like, if it just stays flat, they're going to be great. And then you have those tailwinds. I mean, I think all four of us are in the camp here of this big rotation coming out of the tech trade, out of the Mag 7s into those other sectors, and just how friggin' small those sectors are.
Yeah.
Like, that is a behemoth.
Look at Staples
Yeah.
over the last month. It's
Yeah.
just gone
Super
vertical.
Staples,
It's just gone vertical.
Insane. Why is that?
I mean, basically, everything came out of tech, and it went into basics, energy, staples, and utilities.
Which is
Yeah.
funny because there's cyclicals and defensive, which
Yeah.
doing
Yeah.
well,
Yeah,
at the
yeah,
same time.
exactly. Yeah,
Which the staples is a little bit front running the tariffs because they just got thrown out.
Okay.
So that was probably that. The funny thing about this XLE, the producers for energy, is they've all gone vertical, and oil's kind of done this, and the bears are saying, that's just the geopolitical premium for Iran. Meanwhile, the producers every single day, these
XLE is insane.
XLE, OIH, offshore, onshore, small cap, whatever. And it reminds me of the gold miners because this happened back, was it last year? I think you might have been talking about it in the Navigator, where it's like, okay, gold's still chopping in this consolidation, but miners are going vertical. Someone knows something.
Yeah, something.
And then gold followed it in a big way.
Yep.
And I have
powerful shit.
you have to keep that in your back of your mind. And I instead of me selling the oil spike here, I'm more of a buy the breakout, or buy the the Iran war is not happening. Comes off at $5-10.
Yeah, that's fair. Yeah, it's very right back into value. Okay.
Yeah. I think we should talk a little bit about Cuppy's presentation around dualism, because I think it's kind of contrary to a few of the things we've just been talking about.
Yeah.
Like, if you're super bullish on metals or cyclical industrials and that sort of thing, like he brought this thesis of what if he was looking like, why is everybody so bummed down in consumer sentiment? Why is everybody sad? Why is everybody frustrated? Why does everything feel so kind of shitty right now? And he's like, maybe we're just in a recession and it's just not as obvious because of things like AI capex. And just curious how you guys took away from that perspective.
You want to go, JD?
Yeah, I mean, the sentiment numbers, I think, reflect a lot of things other than the labor market, other than the economy. Honestly, I think it reflects politics. I think people are so disillusioned with, look, politics are nuts right now. Polarization, it just keeps getting worse and worse and worse. And I really think it has something to do with that, like apart from the economy, but I'm not really sure.
Now, it's a tough one. I appreciated his S&P versus gold chart, right? He's like, everybody's saying the stocks are so great. He's like, they can't even keep up with the pet rock. And that's fair. Even though we have a generational breakout in gold, it's still like you would think that that's maybe enough of a risk on move, because gold's not like a flight to safety because of war or anything like that. So because like people are buying gold, buying commodities, that's like a risk on trade mentality atmosphere. And he's right. It's like, stocks could be 8K on the S&P right now. And the fact that they're not is kind of disappointing to me. And I guess it makes sense that it's not keeping up with gold is not a good thing. So, yeah.
I mean,
Well, the last two, gold's volatility when it peaked out on that big rip higher was only higher two other times in history, which was COVID March crisis and GFC 08.
Oh, wow.
And so that's a rarity of a signal that's like, okay, something's weird here. Something's weird. But accompanying those, you had 30% equity drawdowns, and here you don't. And I think the run it hot narrative, I think it will be tested because the Fed's on hold until, new blood, TBD if the economic reacceleration still needs some liquidity help to really stick here. But that to me is powerful. I think there is, a lot of government intervention, papering over the cracks, because it's not a U.S. thing. It's a Japan thing. It's a Europe thing. So yeah.
By the way, you mentioned gold volatility around 2008. I don't know if you remember this, but gold peaked in 2008 at 1,000 when Bear Stearns blew up. and then it traded off until the Lehman blow up when it bottomed at 700.
I never saw a price.
And never saw that price again.
Well, that's to go to the points too about like we've kind of had this vertical ascent where it's been the magic carpet ride to like Valhalla for gold investors, thinking like it just goes straight up with no vol, and you don't get good vol without bad vol when it goes from 15 to 40. And so, you know, these things are just part of a new market structure for this capitalizing asset. And you're going to have that like 20% dips and a 40 vol asset.
I think there's something to be said too for just, I mean, you're talking about this in your presentation this morning about how you look at bonds as an accelerometer for your positioning. And, you know, when you look at the jobs report that we had a couple of weeks ago and the reaction of bonds since then, they've been rallying like crazy, even though it was a gangbusters jobs print. It's like, what do you take from that? It's obviously, it's not quite as obvious the environment that we're in of just, you know, the run at hot basement stuff if bonds are rallying off a hot jobs print.
They're rallying, but they're not trending.
Yeah.
So I'm not paying attention to it, right? If they get to a level that's interesting enough to show, or they start, price action starts showing that they can actually trend out of the range that they're in, which is a pretty tight one. You know, what's the inside range? You could argue that the inside range in tens is like 20 basis points wide, right? Like 4 and 420, or maybe, I don't know. I don't even know what the exact number is, but if you can have faith, if you operate from a position of bonds are mean reverting, that's it, right? There's push and pull. I get it, but they're not going to take me out of my equity trade. That's the most important thing for me.
This episode is brought to you by Coinbase. If you're a long-term crypto holder but don't want to sell your Bitcoin or Ethereum, Coinbase now offers crypto-backed loans powered by Morpho. You can borrow up to $5 million using Bitcoin or $1 million using ETH as collateral, all at competitive rates, typically between 4 and 8%. There are no credit checks, loans originate in seconds, and you can repay anytime with no fixed deadlines. The USDC liquidity can be used for things like a down payment, refinancing high interest debt, unexpected expenses, or anything else life throws at you. Importantly, Coinbase does not treat borrow transactions as taxable events, and over $1 billion in loans have already been opened through the platform. If you want liquidity without selling your crypto, click the link in the show notes to learn more and get started today.
Yeah, I think bonds are also, I think, you know, after Warsh was nominated, I think bonds are front running Warsh a little bit. Once the market figured out, like, you know, the initial reaction to Warsh was like, oh my God, he's a hawk.
Yeah.
Oh my God.
How did Trump not know this?
It's a hawk. Oh my God.
As if Trump interviewed for 18 months to put a guy in there who's going to hike right.
Yeah, really. You just want to tell me like
that's the TDS at full play. They're just like, you know, he doesn't know what he's doing. It's like, dude,
So Warsh has made a lot of comments about how, you know, AI and these other deflationary forces allow you to lower rates. And, you know, a bond is really, at its core, just the future path of Fed funds, right? So 2-year notes are really the future path of Fed funds, but 10-year notes are too, just over a longer time horizon. So I think what the yield curve looks like under Warsh is you have 2s at 2 to 2.5, and you have 10s at 3.5, and the curve is 100 basis points steep. But you know, a move to 3.5 on 10s is pretty big. And that's going to get mortgage rates down to about 5.5, which does all kinds of interesting things. So that's kind of what I think the yield curve looks like under Warsh.
I agree steeper. I don't agree that low, but I agree steeper. One thing I do agree with you, JD, and your secular bearish dollar view is, and how I like to think about why, you know, even if you might be sort of, some people are very bullish, I'm seeing on the FinTwit community on bonds here because of the AI deflation cost potential. But a bond is just dollars in the future. And so, you know, I just can't get myself to buy them even for that type of trade because I don't want to do anything with dollars in the future.
I think it's new to look at the second order effects. Like I agree. I think the major or significantly steeper curve is likely. And it's interesting to look at what Druckenmiller's 13S just came out last week, and he went long XLF financials. And, you know, he's the guy that is tapped into Warsh, he's tapped into Besson. Like he is part of that complex. And he's going to buy financials. That's pretty interesting if you contrast that with a steeper yield curve, which is great for banks.
Yeah, he also bought Brazil. He bought
I saw it,
USD,
yeah.
which is one of my favorites. Look, like Brazil is, Brazilian politics are even more nuts than U.S. politics. Lula seems like a done deal for the next election, but anything can happen. And Brazil is trading at like 6 times, 7 times, with massive dividend yields. It's like anytime you see a country that's trading at a 6 PE with a 6% dividend yield, that's basically where the U.S. was in 1982, right? Which was the best time to buy stocks in history, So I'm not too wound up about who's going to be president of Brazil. Like when stuff gets that cheap, you just have to buy it.
Yeah, I mean, when it gets that cheap and the dollar is where it's at right now, so it's like it's about to fall off a cliff. Like,
and the real
Yeah.
keeps rallying. The real it's relentless. It just keeps rallying. There was that blip a month or two ago when Bolsonaro's son was going to run for president, which screwed everything up. But like it recovered and it just continues to rally. So.
Druck also had some calls at the bottom there on Macro Dirt LLC, private equity.
There we go.
Yeah, I think you guys are on opposite ends on the U.S. equities versus international. Are you
No,
where are you at?
Like, look,
Yeah.
I'm not smart enough to be.
Yeah.
I really don't have the intellectual capacity to try to be a global.
That's fair.
Guru. You know what I mean? It's like I'm fine if those stocks outperform, but it's like if Europe is up. I was saying this to somebody the other night. If Europe is up 23% one year and the S&P is only up 16%, like, does that mean that I still can't print 35-40% trading around this stuff? So like, I just stayed US centric because I'm a trader. You know what I mean? Like, I understand that there's value and things like that to invest in on the long term, but I don't feel like, as long as we're in a bull market and I have sectors and breakouts and things that I can trade and things that I can upsize when I get confident about it, I don't really need to leave the continent. I just keep it simple. You know what I mean? For better or for worse, but it's been working for me.
That there's one question that like this theme, it's common. I think it goes to like the low consumer sentiment where it's like, the wealth managers, and this isn't a diss, but you just hear this sentiment a lot where it's like, oh, with equities at all-time highs and this going on and the craziness of politics, this sort of like mopey, depressed, like, what do you invest in? And it's like, there's 100 bull markets out there.
Yeah, exactly. There's markets somewhere.
Yeah, there's bull markets. If
here's an interesting one. If you look at a list of the top performing assets in 2025, gold miners were at the top, and a bunch of other stuff. And pretty close to the top of the list was international small cap value, which was up 46% in 2025.
Wow. Well, I mean, every LATAM market. That's why I'm bullish Miami real estate, because you got the New Yorkers and Californians coming down, and then every LATAM stock market up 100% year over year.
Makes sense.
Yeah.
Makes sense.
You had Grant Williams to close things out.
Man.
Legend.
Yeah, legend. His presentation is just crisp and well thought out, and just like a very peaceful thing for your mind to go through. You know what I mean? Yeah. I don't need to come out of it with trade ideas, which is why I liked it. You know what I mean? And what I loved about it was that he brought up Tony Dayton as like an actual topic.
Yeah.
Because that's something that I've clearly been, I mentioned it like 10 times. I've been obsessed with that interview just because there's so much wisdom coming out of that guy's mouth that you really don't want to miss it. And so I'm glad that he brought that up, and the ideas of, patience and scarcity and, things that last are things that's how you want to think, and it kind of just fits into the idea of, for a trader, it's like just kind of causes you to just exercise more patience and try to be a little bit slower moving and kind of figure out things that you can be in and just leave. Like it's hard to trade around things, but you can do it and make money. But it's also nicer to just be in it and watch it run. You know what I mean? So that was kind of interesting. And then I got confidence from that. Not to switch subjects too far, but Brent does a very good way. Brent has a good mode of being understatedly bullish the U.S.
Yeah,
you know what I mean? Like he's like, like he kind of has that attitude. Like, look, everybody likes to throw rocks at the United States right now, and we don't get fair media coverage. And then he goes and tells you this is how it is. Big beautiful bill, the reindustrialization of America, the Genius Act, the stable coin plan, Steven Friedberg running the, Office of Strategic Capital. Like, you don't want to fade this stuff. I'm telling you. You know what I mean? And like, you agree with that, and it's just everything gets such a negative connotation in the press because it's Trump's, admin, and everything that we're doing has to be negative. And he's like, I'm not seeing it that way. He's like, he's pretty bullish the U.S. and thinks that this stuff is going to follow through. So
my favorite slide from his was the like quadrant of Soros, Druck, Besant, and Warsh. And if you're a student of the game and markets, like, it doesn't, Druck, Soros, politics have kind of divided, but it doesn't get any brighter than this. And when you sit there, you're just like, I trust, like, these guys are magnificent.
Yeah.
And the corruption when they get to DC and these sorts of things, but when it comes to making the right, and I'm a big believer that the US's deep capital markets is what allows us to have such a powerful, strong economy, sovereignty, etc. Above all else, which we lose sight of when things are going so good. Then we get into the social issue where it's like, first world problems. But if you have that, guidance at the helm, you can kind of disagree with all the things around the edges and what's going on, but you have to find some, surety or that it's tumultuous. And sometimes I feel like we, as a society and media, point a lot of fingers and hatred towards the people that are actually shining the light on the problems, attempting to fix it, saying, you started this problem. It's like, maybe I'm trying to fix it and you didn't know about the problem until I started trying to fix it because everybody else lied to you and tried kicking the can another 10 years. Yeah. And so I think education around that sort of thing is
I mean, we boil down to like first principles of those guys, right? Like if you rewind 5 years ago and you told somebody who's super into macro or whatever that the Soros, Druckenmiller alumni is going to be running the Treasury and Central Bank, everybody would be ecstatic. But the problem is that they're all in on the debasement trade stuff, and they're like, oh no, now Warsh is going to blow up my debasement trade, so they're upset, even though if they didn't have those positions on, they didn't know who the president was, they just saw those people in charge of those areas. I think a lot more people would be excited about what's happening.
Fair. People have a hard time keeping two truths together as well, because you can see that and be like, well, I'm bullish the US because these guys leading, but I'm also bullish gold because that was all their biggest positions, because they know that to get us back on the right ship, we actually need to debase. We need to do some of these things. That's good for gold. So people have a hard time holding multiple truths. That's true.
That's true. It's a tricky landscape. It's a tricky landscape right now.
Yeah, big time. Any other big takeaways from the last couple of days, guys?
I love JJ's story, man. JJ's story about trading, that live real-time experience that he relayed blew my mind, man.
So he's like a long-time commodities pit trader.
He's been now
you guys
since the 70s, man.
Yeah.
So I met him the first time for Goldman Sachs, I worked on the floor for a little while. I went down to be their gold options broker and also had to do some spot trading in gold on the floor. And JJ was like one of the biggest guys down there and with the best reputation and like the most studious dude and like just had it all going on. And you can see how he breathes markets, like it's so different.
What's his what's his educational background?
Trying to think where I went to college.
I mean, that's like kind of my point.
Yeah.
I got to tell you, the disappearance of open outcry trading has been a very bad thing.
Oh yeah.
I mean,
of course.
maybe not necessarily in terms of transactions costs and slippage and stuff like that, but an open outcry exchange was a place where any kid or any asshole could walk in and compete and learn and make a living. Like nowadays, if you're coming out of college, your options are like 10 banks. Right. And you have to have a Harvard education, a Yale education. Your resume has to be like 4.0 GPA, activities, stuff like that. They're only taking like these blue bloods kids. Like any jerk could walk in off the floor and be a millionaire.
There was the democratization of competition kind of thing, right?
Nassim Taleb was a floor trader. I don't know if you know that, but he used to trade bond options.
Right.
Yeah.
Well, I mean, Gary Cohn, who ran Goldman Sachs, was freaking silver spread trader, essentially. But that is the beautiful thing about the floor. But listening to that story, made you realize what surgeons those guys really were.
Oh yeah.
You know what I mean? And especially on hectic days like he described, where he blew up his entire account and still had the position on, and it was still limit down offered. You know what that feels like, man? That is an out of body experience. Like you can't even believe. Like you work on gut instinct, and then it was cool to see his instincts take over and be like, oh,
I gotta do
Bobby XYZ just bought 700 from him down 40 cents. Okay, let's, that's a value trade. Somebody knows what they're doing. I'm in, like just that keen sense that floor guys had, and he got his money back. Or most of it, you know what I mean? And but trembling like down $1 million with the market still open and the things limit down. It's like I had a lot. I brought me to tears. I swear to God.
Yeah.
And then because I read every single thing that he's ever wrote, and after he came off the stage, I was like, how come I never heard that story? He goes, I never told it.
It's so big when
that was awesome, man. Oh, God,
the whole room was like silent, and it was like he's reading it from a novel because he's just like,
yeah.
And then then it was up 10 points, and next thing you know, I'm up $1 million, and 20 minutes later I get a order to sell 5,000 lots and limit down, and I lost it all, and the crowd just like everyone's like like storytelling is just like,
but the compounding of lost it all, still have the position, it's offered limit down, and there's 3 hours left in the day. Like, you know what I mean? It's like you're in a chokehold. You're in a chokehold and you can't get out. Like you're trying to tap out in a UFC fight, and it's like, no, you can't tap out.
Yeah.
You just got to deal.
I mean, I think, in light of no more pits like that, to your point, you started off your conference by talking about the importance of live events now that we're all online, and you had this quote about Elon Musk talking about how the new luxury good, premium good is in-person interaction with people in like-minded circles. And I think that's so important. Like that's, at Blockers, we have our digital asset summits that we do. And that's also a key quote that we've been riding on as well. Yeah. And then you have this going with your inaugural conference. And I think it's going to become a lot more important to hang out in person with people that you just want to talk shop with.
That's where the magic happens, man. You know what I mean? It's like the difference between watching a concert on TV and being at the concert in the garden, right? Like it's just being around the people and feeling the free energy. Mm-hmm. There was so much energy in the
reading in a club and listening to some house music.
Yeah, exactly. Whatever.
DJ's not so big.
The whole thing.
He took down. Had all of Nashville.
Yeah. We had a little bit of everything, man. That was a great night, a great day, a great night. Great party at Kid Rock's after. Holy shit. So that's what Nashville's for. That's why we did it.
Yeah, bull market city, in the words of Tony Greer.
That was good. Yeah,
it is a bull market city. Well, I mean, I've been coming here for like 7-8 years now, and like it's exploded right in front of my face. Like while I'm coming back every other 2-3 months. So it's just something.
Felix was mentioning the airport. You walk in and it's just all the famous country singers welcome you on the
I was like, hey, I'm Luke Combs. Welcome to Nashville. I'm like, okay, let's go.
He's like,
the place is great. The airport, like this, you're not hustling and bustling, and you're in the city in 15 minutes, and this place is glorious, man. It feels like New York in the 90s.
Yeah, it's awesome. Well, thanks for inviting us, and dude, it's awesome to be here.
You guys are the best. We had so much fun hanging out all day and all night. We got another night left. I mean, we got to throw this down. I'm literally blown away at how happy people were at the conference, man.
A lot of
positive energy, man. People
just good vibes.
Yeah,
good people.
Yeah. So thank you guys for coming here and doing this with us. This is a great partnership that will continue.
Yeah. We were just saying we're gonna try and do these more regularly because it's fun just to banter with all of us. Like none of us take ourselves too seriously.
Exactly. That's gonna be live from JD's next Vegas performance.
Right.
Yeah. That might be happening soon. We'll see.
There you go.
We'll see. Yeah.
Badass, man.
Yeah. All right,
beautiful. Well, we'll be back here for another 10 years in a row. That's Mohit and I's goal is to do another 9 here and, eventually graduate to someplace else.
Beautiful.
Yeah, man. Thanks for
right.
having us, fellas. Nice job. Nice job, Felix.
Thanks, guys.
Nice job, Stinkburger.
Penis, Brett.
That's a wrap.